probably haven't gone a single day without hearing some headline or some YouTube video saying that we are in an AI bubble, and by definition we are. We are in an AI bubble. A bubble is when an asset price is driven up far beyond its intrinsic or fundamental value based on investor hype or FOMO, and that is what's happening. But that being said, I actually just increased my AI exposure in my portfolio, and I plan on continually investing into the future. So why is that? I'm going to explain my understanding of the current market, and I think we can compare it to the dot-com bubble to get a pretty basic, similar explanation during the dot-com bubble. And I think the same thing is happening with the internet. People promised, a certain value they can get using it. AI, people overinvested. The value of these companies are too high, and they're not going to be able to bring the value they promised in the short term. There's going to be a market correction. I don't know how much. And then 10, 20 years in the future, it's probably going to be a part of our lives the same way the internet is today. And a certain handful of companies are going to come out of this correction and control the industry. So to oversimplify it, we've invested hundreds of billions of dollars into AI infrastructure. The market is getting priced where we need to see value created very, very soon. But this kind of technology takes a long time to implement at a large scale, and it's unlikely that we can get that level of value quick enough. That's a very simple explanation of what's going on right now, but there are some differences between now and the dot-com crash. A lot of these companies actually are profitable right now. A lot of them aren't 100% invested in AI, mostly big tech, but they have other revenue sources. PE ratios aren't as high as they were in the 2000s, and there's a lot more regulations today, and there was a lot of fraud during the dot-com bubble that could still be going on. There could be some type of fraud, but it's a lot harder for that to get through, and that fraud was more towards retail investors. There's a lot of private money going around these AI companies, so I don't think it's the same. So that being all said, why do I continue to invest in AI into the market when I do think we are in a bubble? And that's because of a number of reasons, but first off, the opportunity cost. You can't predict when this bubble is going to pop. If we could do that, we'd all be rich. So it's not going to happen. There's going to be a period of time between now and when this bubble potentially pops. Could be 1 year, could be 5 years, could be 10 years. We don't know. And in that time, there's going to be a lot of growth. I started investing around 5 years ago, a little more than that. And every year people have been speculating of a market crash, and it hasn't happened. So no one can tell you when it's going to happen. You want to have some money invested, earning interest during that time. And then there's a second possibility we also have to consider. The bubble never pops. I could be completely wrong. I could be watching this video with my kids many years into the future and say, hey, look how stupid dad was. That's why we can't buy you the PS37. It's completely possible that I'm talking nonsense right now, and Sam Altman comes out with AGI and a new breakthrough that immediately brings value to all this investment, and everything was worth it, and our economy booms. Now, do I think there's a strong chance that happens in the near future? Probably not, but I don't really know. I'm not in these meetings. I'm not a programmer for these AI companies. I can't tell you that. So what am I doing in my personal finances with my investments? First off, it's important to note I'm a 20-year-old college student. I'm not a financial advisor. This is just what I'm doing, and hopefully it sparks interest and for you to research your own stuff. But I'm investing how a 20-year-old would. If you are close to retirement age, you probably want to have your money more conservative investments, somewhere safe that can't be affected by a market correction. I have many years to work and many years to be in the market, so a short-term market correction wouldn't be detrimental to me. So what am I doing? I'm doing dollar cost averaging. Dollar cost averaging is the most simple investing strategy that has been historically extremely successful. You're investing the same amount every period, regardless of what stock prices are or asset prices. So historically, this beats out trying to time the market. No one's ever going to be able to time the market. It's physically impossible. So having your money invested for as long as possible is the best option. Time in the market beats timing the market. You want your money always earning interest, and you don't want it to get eaten by inflation on the sideline, waiting for what you think is the bottom. So what am I doing specifically? Well, first off, I invest in a lot of ETFs. Keeps you very diversified very easily. You find low-cost ETFs, and it's a pretty smart, safe, easy investment, relatively safe. Secondly, when I do invest in AI, I do it smartly. I'm investing in companies that have multiple sources of revenue that are not 100% dependent on AI and have been profitable for some time. So if there is market volatility, there is swings in the AI industry, they can survive. and companies like big tech would probably be the companies that survive a crash and, builds the future that I said was going to happen, where AI becomes the internet of today. Like I just said, what is the foundation of AI? Probably going to need energy to power AI and the infrastructure to support it. And then I do actually have a limited exposure to high-risk AI plays. I would say around 2% of my portfolio is in high-risk AI plays, just because probably be not smart to have zero investment in anything with some high risk. And this is probably going to be the most important thing I say throughout the entire video: having a cash position. You want to have a lot of cash on hand. I recommend 6 to 12 months of an emergency fund. So this would be your expenses for a month times 6 to times 12, sitting in a cash account, hopefully gaining interest. You want probably a high yield savings account, a CD account, or possibly bonds. I personally use a CD account, and I'm going to open a high yield savings account also, and that is currently earning me 3.5% interest. You also want some cash on the sideline in one of these accounts earning interest, waiting to buy up discounts in the market. If there is a recession, a crash, the prices of stocks and assets are going to drop dramatically, and the people that are able to buy up these assets at these discounted prices become extremely wealthy when the market rebounds. Historically, most people get rich when they buy up a lot of assets during a recession. That's how most people get rich, and I don't see why it'd be any different here. I would say personally around a little less than a third of my net worth is in cash, sitting in the CD account, earning 3.5%. Maybe that's a little dramatic, but I am a college student. The job market is pretty rough. If you're looking to hire anyone who has a finance and data analytics degree, let me know in the comments, but it's important to have a lot of cash on hand during tough times. I could make a long-winded video trying to analyze the market, trying to analyze financial data, pinpoint exactly when the bubble is going to pop or not pop, and bet my whole account on that information. But I think this is the most well-rounded strategy. You have money invested to profit as the market continues to go up, and if there is a pullback, correction, or bubble pop, you have money sitting on the sideline to buy up all those opportunities, and you also have cash to survive if the market really gets that bad. It's probably not going to be an easy couple of years if there were AI bubble popping, but that's the only way, in my opinion, to become wealthy in this situation. I think you're covering all bases as best as possible. I'm going to make a video explaining the exact stocks I just bought and how I reallocated my portfolio based on this information. So that'll be coming out soon. It'll be here when it does. But until then, subscribe and turn on the notifications so you know exactly when I post that. It should be very soon. Thank you for watching. Peace.